Okay, everyone, thank you for joining us. And today we're going to look at a strategy that can work if the stock market is declining and dropping. And looks like we have a seasonal coming up here. That could very well be the case this year as well. So we're going to look at some automated technology to help us along the way. So thanks for joining us. This will be short and sweet and to the point. And before we get started, let's talk about speculation. Remember, as speculators, we're trying to make money as the markets move up, down, and sideways. And of course, if there's any opportunity for profit, that means there is always risk. So do take a moment and look through that risk disclosure, please. Remember that all funds committed should be risk capital and that past performance is not a guarantee of future results. So we've all heard that. So this is what I'm talking about. I mentioned the seasonality. You'll see here in a post-election year, there's an interesting seasonality. We're right around here now, starting with nearly the beginning of August. You'll see there's this seasonal pattern, historically speaking, where the S&P 500 has a little bit of a drawdown compared to a typical year. And looks like perhaps today might be the start of that, but we shall see. And this is just a longer term chart here. You can see back from July, mid-July. So we're, of course, right around this area here. So that's historically speaking, that's what might be expected on a seasonal basis. So what could we do? How can we perhaps prepare for that instead of doing nothing and being passive and sitting on your bullish positions? So we want to trade the environment that the market is offering us. And with a little bit of background on who we are, we're AltaVest since 1997. We've been doing this, and of course, we're all licensed in the brokerage industry with all of that experience under our belt. You may have seen us in the past in some of these other venues and working with other vendors. Along the way, we've traded millions and millions of futures and options contracts. So we'd like to put that experience to work for you. You don't need to try to figure out everything for yourself like this poor guy's trying to do. We want to keep you off this emotional roller coaster as much as possible with the technology and some of the strategies we're going to show you here in just a minute. We can probably all relate to this, all the different stages and so forth as we go along this market roller coaster, the euphoria here, and then the fear, and then you have that white flag at the bottom, capitulation, then depression, and maybe there's a little bit of hope, and now optimistic, and you do that over and over. Maybe there's something we can do to avoid that. And part of that, I think, is trading the right market. We're trading not individual stock options, but we're looking at stock index options and futures options to be specific. And we like these because, of course, they're less volatile than individual stocks. So we have a proprietary RTI indicator. I'll show you about that. In other words, more about that. In other words, it can automate our profit and risk management. And then, of course, we're following just a couple, 2 or 3 markets when we're looking at a major market index. You don't have to track thousands and thousands of different securities. Here's a strategy, we call it the bear hedge strategy. I'll show you in just a second. And quite simply, you're selling an out-of-the-money call spread and using that money to finance the purchase of an out-of-the-money put spread. People call this different things, and here's what it looks like. You sell this out-of-the-money call spread on the mini S&P 500 in this case. Take that net money that you collect and buy an out-of-the-money put spread. You can typically do this for even money, and if the market drops quickly enough and enough in magnitude, the spread overall should do well. But here's the trick. How do you know where to start? In other words, which options would you use? What's the pricing? What's the expiration? How about the timing of your entry? And how about the exit? That's really probably the most important thing, at least as important. A lot of times people spend all their time manipulating option chains and strikes and struggling to actually choose a trade and select a trade and get the trade entered. And then once they're in it, they're not sure where they're going to go with it. So here is Theta Trader. I think that's going to be an answer for you. We're going to show you in just a second. Pre-built option spreads. Our proprietary algo creates these trades. We have that automation we talked about with the RTI. Multiple market conditions. We're going to look at a bearish strategy. So simple, effective option spreads, and then profit and risk management. And with that said, let me switch gears and show you the strategy here in the Theta Trader platform. Okay. All right, great. You're now looking at a demo account for Theta Trader, and it's a bit user-friendly here, or intuitive, I should say, and very user-friendly. Don't need to explain a whole lot of what we're looking at because we're just going to focus on one thing, but you'll notice here there's something called theta trades at the top. There are bullish strategies, bearish, and neutral. And we're looking at the E-mini S&P 500, NASDAQ 100, and Russell 2000. Those are the indexes that we're focused on. And you'll notice if we're looking at bearish strategies, for example, on the NASDAQ, you'll see a bear hedge. And let's click on that and see what the algorithm has decided. So these are all the bear hedge strategies available from Theta Trader that's generated with the algo. And since we're looking at this seasonal trade, I thought maybe we were looking for something that would go through August. How about an August into month expiration? Let's drill down and look at that. First thing is this graph. I think it's helpful to look at the graph, get some perspective. You can see here, you're selling this out of the money call spread, and then you use that money that you collect to purchase this out of the money put spread here. It's just that simple. And all the details are already pre-calculated for you. The algorithm has chosen, once again, different expirations, the different strike prices here, and the pricing is all calculated for you. If you wanted to, you could modify some of the strikes, but that sort of defeats the whole purpose of the algorithm doing the hard work for you. So with that said, it's always going to default for a buy because you're basically buying this bear hedge strategy here. You can change the quantity to anything you like. Maybe we'll do 3 of these. The pricing is already figured out for you, already pre-calculated. And we'll go ahead and place that order. Give it just a second, and there you go. So it shows up in the demo account as if you're already filled, of course. And then if you're wondering what to do next and how to track that position, you can go right back to the dashboard. Okay, and you'll see here, here's the call side of that strategy we just filled. And then, of course, here is the put side of the strategy that we just filled. And you'll wonder what these colors are. Well, that's something called the risk thermal indicator, and that can be automated. So for example, when the RTI reaches a red for too much risk or a blue, which means take profits, the RTI will automatically close out that position for you. And you would do that here under your account settings. You simply activate your risk manager and activate the profit directive, and it's just that simple. And once you do that, you don't have to babysit the trades. Theta Trader will then track and monitor those positions for you. You can even go here and look at your open positions. There you go, and you can see you get a sort of at a glance view of all the different RTI signals on all your open positions. So green, yellow, nothing to do. You'll notice orange, it's a more elevated risk, and that's only because it's a long option strategy. So keep in mind, anytime you're doing a long option strategy, it's more of a lower probability outcome and probably a higher likelihood of losing premium on that trade. So part of what we do with ThetaTrader is really focus on selling options and collecting premium and then managing the risk. So those are much higher probability outcomes in our view. In fact, that's what the math says. All right, with that said, we'll go ahead and switch over. We just wanted to give you a short rundown on that one particular strategy. Okay, so we think using the automation will help you a lot with your options trading. We think ThetaTrader can be a big part of that as well. And if you want to learn more about using ThetaTrader and automation for this options trading, we'll be glad to work with you and help you along the way. There's our phone number, email at info@altavest.com, and we'll put a info in the description below as well if you want to follow up. But we'd love to hear from you, and thanks for joining us. Bye-bye.